All right, we had a bloodbath out there today. S&P 500 was down 1.4%, Nasdaq down 2.5, and the Russell down 0.8. Actually, you saw some strength in the Russell today. I mean, that was the laggard to the downside per se. It showed relative strength, and you saw a lot of small caps kind of not followed the entire path that was being blazed by your FANG stocks. FANG stocks were down bad. I mean, there was really none of them that were being spared. I mean, when you take a look at, and we'll go ahead and pull up the charts real quick on these guys. You have Facebook down 2%, getting just train wrecked there, okay? Still not getting above that 200-day moving average. You have Amazon. This stock just doesn't want to get back above its rising trend line that goes all the way back to March of last year. That's a problem. In fact, you saw it go all the way up to this rising trend line and then sell off. So now you got to wonder, okay, are we going back down to support, maybe even below 3,000 on Amazon? Good chance of it. Apple, not as bad as the rest of the FANG stocks. And this one has been the one that's kind of held out and not seen as much massive selling as a lot of the others. But Apple still, that was a pretty hefty candle to the downside, down 1.9%. Remember, it's a $3 trillion stock. So when that thing sells off, you're going to feel it across the entire market. And when you get the entire, like all of the FANG stocks selling off, you're really, really going to feel it. That's why the Nasdaq, which, feels it the most. I mean, 50% of the Nasdaq 100 is going to be comprised of your FANG stocks, including Tesla. And that's why you're down 2.5% on the Nasdaq 100 today. And check it out too. Nasdaq 100's testing this rising trend line, dipped below it just a little bit intraday. But this is a nasty looking topping pattern here. I am not a fan of it, okay? This is not something that you want to be buying the dip on right now, because there's even the times going back about 2.5 months now when we did buy the dip. The dip was very short-lived. Right here, you go back to the beginning of December, 3-day dip, right? Or a 3-day bounce following the dip buying. Right here, you had about what? 4 days? 4 days before it finally gave way again. So now we're in 3 days. Very little enthusiasm compared to the previous dip buys. And then you get 1 day where the market just takes the entire elevator down. That's where they come up with stocks take the stairs up and they take the elevator down. Today's a perfect example of that. Completely down, back to this rising trend line here. It's just not like what we have seen with previous dip buying opportunities. And this is not a candle that you see when it's intent on buying the dip and pushing back to all-time highs. You get this kind of candle, you're usually going to see more downside action in the market as a whole. So Qs, very, very difficult. Not something that you should be liking right now at all. So you also had above average volume. That's important because it's very hard to say that there's any panic selling in the market when you don't have volume. When you get volume days like this and you're only going down a little bit, that's not something to get bearish on. You get candles like, or you get volume bars like that, that's something to get more bearish on. And then we go back to SPY, right? You had a pretty good dip buy right here, but look at the dip buy here. What did this last for? 2 days? Then you get the big candle again, stairs up, elevator down here. So more challenges, and it's not necessarily on key support levels like what we're seeing with the Nasdaq 100, because you're composed of 500 of the largest stocks. So the influence that the FANG stocks have, though enormous on SPY, is not as great with the SPY as it is with the Nasdaq. It's also the reason why the Russell 2000 is only down 0.8%, because it doesn't have any of the FANG stocks in there. So it's more of a better reflection of the rest of the economy when you don't include the FANG stocks when you take the Russell 2000. But looking at SPY, back below the 50-day moving average. We've talked about the 50-day moving average and how important that's been, because every time it's been tested, and or at least most of the time, minus September and October of last year, it either rallies that same day or you see a push the next day right back above the 50-day moving average, and then it goes back up to the all-time highs. We've seen it multiple times. I pointed out almost in the last probably 10 live streams that I've done. But again, I'll point it out one more time. You can see every time I click this mouse over a candle, this is where it's been bouncing off of the 50-day moving average, and it goes back a really, really long time. But check this out. What makes it a little bit different, though, the price action this time around is we dip below it. Okay, we get back above it. And so when you see that, history suggests we're going to get one of these kind of moves where we go right back up to all-time highs. But that's not the case here. Instead, we got a big candle here today, and it took us right back below the 50-day moving average. So kind of uncharted territory for the most part. Very, very interesting situation we're dealing with here. Also, make sure to leave any comments that you want. If you want me to go over some of your stocks, feel free to throw out your charts that you want me to take a look at. I'll be here and do everybody's charts as a result. Now, one of the other things that I would show you too is, again, like with the Nasdaq, you had a strong bout of volume that came in on SPY. So pretty rough day for the market. I was actually an LRCX back on Monday. I got into it, got this nice little rally here yesterday, sold a third off for only about like a 3% profit. And then we got like 2 upgrades today, got all the way up into like the 720s. I sold another third at 724. And then as I was watching this thing come back down to earth a little bit, I said, you know what? I'm going to go ahead and take advantage of the strength that came with those 2 upgrades on LRCX. Got out my last third of a position, got out at 712 or somewhere around there. 712, I think, is what it was. But nonetheless, though, really, really good trading. And my goal was seeing if it could get up to 719. I pretty much got right around that area there. But when you factor in the lot that I sold at 724 and the other at 714, but you can see it went right up into resistance. And so it's good to take profits aggressively in a market where it's not as certain as, say, when the market's trending unabatedly higher, like what we saw here back in October. I mean, when you're getting these kind of moves out of the market where it's just day after day after day, you can be a little bit more liberal with letting those profits run. But when you're getting markets like this, like what we've seen over the past 2.5 months, basically, it's just a very big chop session. You got to take profits where you can get them, and you got to take them aggressively. So what are the sectors that were rallying? So that's also something that's worth going back over to today, because it started off today, and you'll see in the right-hand side of my screen here, you had about 10 out of 11 sectors that were rallying right out of the gate this morning. Breadth was looking good. I was even looking at possibly adding some long positions. I wasn't sure I wanted to today just because of how the price action unfolded yesterday on SPY when we got this doji candle here. I didn't like some of that weakness we were seeing in the later afternoon part of the day. So I wanted to wait a little bit, and I'm glad that I did, because when we started selling off here, I just took a step back and like, have at it, guys. I'm not gonna try to buy this dip at all. So we go from like 10 out of 11 sectors trading higher to 3 out of 11 sectors trading higher on the day by the close. Now, before I get to ones that led to the downside, what do you notice about these top 3 here? Utilities, staples, industrials. Minus industrials, utilities and staples, those are your most conservative sectors. That's what people tend to flock to when times get very, very uncertain. And people are getting out of tech, including Apple, which was kind of like a safety stock. And a lot of people are talking about, oh, big tech is the new safety play. But when push comes to shove, where is people putting their money back into? Utilities and staples. Now, then you want to look at what are the industries that were driving these sectors higher today, and just the industries as a whole that were doing better. And so let's pull up the industry chart here on the right side. You'll see, okay, infrastructure operations. I don't put too much on that one just because it's only one stock that's in that particular industry. So if it has a good day, it'll be the one that's leading the way. But the next two, though, food distribution and grocery stores. You notice a little bit of a theme there? And then you go down here, farm and heavy construction. So you're starting to see a lot of like agricultural plays move into the picture here. Now, we talked about how industrials was one of the top 3 sectors of the day. Well, you got Caterpillar, right? And I apologize for all of the lines that are on the chart, but you got Caterpillar. That's going to be in industrials, farm and heavy construction machinery. So right here, basically your 5th strongest, 6th strongest sector of the day. And that's like out of what, 142? So you have cat, you also have deer. And we've talked about Deere in the past. It is basically stuck in this huge sideways pattern. Nonetheless, I'm going to go over it there because there may be a new opportunity coming about with that one. But again, farm and heavy construction machinery. And then the other one was industrials. You have Boeing making a nice move today as well. I would say probably Boeing is not part of that theme, but I wanted to highlight it as one of the stocks that was moving the industrial sector pretty well today. But Deere, Caterpillar. Then let's look at what some of these food distribution stocks were. PFGC. Look at that one. Moving up pretty good today, 3.5%. You also have USFD moving up as well, about another 3.3%. So I like to drill down. I like to see the sectors that are moving the market. I like to see the industries within the sectors that are moving the market, and then the stocks within those industries that are moving. So we've boiled it down to like USFD, Caterpillar, DE for John Deere. We also talked about Kroger and PFGC too. But yeah, Kroger, I don't really see too much of an opportunity there in Kroger. I mean, you could maybe just go chasing after these gains. I don't think that's the move to make here. It's been kind of a choppy play too, but if you were to get into Kroger, the time to have done that was like around 43 back in early December. I feel like the ship has sailed on it. Maybe you could have done it on this retest. That would have been a good trade as well. But that ship has sailed. So you don't want to force trades that the market's not really providing you a good opportunity on. But the other one too, TWI, this is another farm and heavy machinery. Again, it's up, but it's not up as much. You have a bull flag pattern there, but that's going to be a much more volatile play. And markets where it's become much more uncertain, you're going to want to make sure that that you're not playing high beta stocks. Beta being the amount of stock moves relative to the S&P 500. So if the stock moves like 2%, or if the stock has like a beta of 2, which is pretty volatile, that means that if the S&P 500 drops 2%, it's going to drop 4%. So it usually doubles the amount. If it's one beta of 1, that means it usually matches the market's return on average. So Kroger, no go there, but check out PFGC that we were just talking about here. What am I seeing there? Well, there's some resistance here, but if it could get above this resistance, this one could be in play here in the next day or so. I mean, tomorrow's Friday. U.S. markets are closed on Monday for Martin Luther King holiday, but coming back maybe even on Tuesday, if this thing hasn't broken out yet, I'll move above 49.88. Could be a nice little opportunity there. And then outside of that one, you got USFD. Check out this. Coming up on some resistance there. That could be in play tomorrow. A little bit of a double bottom action there too, right? I mean, you got the first bottom here, and then you got the second bottom as well. So a little double bottom action can confirm getting above this resistance here, perhaps around 37.62. Could have a play there. Now, what I would say too is that even though that these industries are rallying hard today, and even though they have some good setups, there's no real point in buying stocks when the market's just ripping lower. If you're gonna have to fight the tape, sometimes the best option is just to go cash. I mean, it doesn't mean that you can't make money, but sometimes you're kind of like a fish going upstream a little bit. So it's better to actually, in my case at least, I like to look at more of like the short plays, the inverse ETFs and stuff like that. But that's your food distribution. Then you got Caterpillar. Look at this bull flag here. And I didn't even notice this until today, but you also have a pretty heavy resistance level that's going back, and it's actually just above it right now. So that's, if this was like your secondary bull flag breakout, it's like the secondary of the secondary breakout, right? Because initially this breakout here above 216 was the original breakout. Then it formed a bull flag. Now it's breaking above this resistance level. So it's breaking a lot of resistance levels, showing a lot of strength. The volume looks pretty good on it, especially on a day where the market was just seeing torrential selling. That's a good look there. So for me, probably the stop loss would be below the lows from Tuesday, and that's going to be about 216.57. Really, really good chart though. And then of course Deere, and the reason why this one has a little bit of appeal, look at that resistance level. Breaks above that resistance, then you got to contend with. Okay, we'll start with this resistance first. 386.75 is, I would say, let's say 387. Breaks above 387, then you got some resistance here at 394 that's going to need to break through. And it's struggled with it since March of last year. It's faded it. It pushed above it one time and immediately sold off, tested it again, sold off. So That's the biggest concern there. So if you play, you may have to be okay with taking like a couple percent profit on it if it gets up to that level and you see a sharp price rejection. Stop loss, I'm probably looking at a stop loss below the 1.6 lows for 368.22. But if I have to choose between Deer and Caterpillar, probably going to be Caterpillar, just because of this box resistance that's just been a bit stubborn on Deer for a while now. So we've talked about the leaders in the market. Now, what did we see selling off today? Well, let's flip the script here. The weakest, electronic and gaming, TTWO. We saw some strength in that earlier this week, but now it's trying to do the exact opposite, right? So let's pull up TTWO, which just bought out Zynga, right? It's only down 0.79, so it's not taking it as bad as the rest of the stocks within the industry. But you got electronic, you got software back at it, man, just selling off hard. Take a look at some of these other software stocks, even though it's not part of the application software. SQ taking a beating. You've got Adobe, again, taking a beating, down 3%. And what do you see right behind software applications? Software infrastructure. So massive selling still going on. And these were big plays back in the day. You take Unity Software down to 116. Guys, these names are, people are going to say, well, they're on sale now, right? Well, that might be true. You got like Unity pulling back to a major support level here, but they're on sale relative to what? The fact that they were trading at 200 just a couple of months ago. Yeah, it'd be on sale relative to that, but look at how much these things have rallied. I mean, this one's IPO was back in just September of 2020. It's gone from like 60s all the way up to 200. So yeah, this thing could still fall further. I mean, remember the dot-com bubble, and I'm not trying to say the bubble has burst and we're going straight down from here. I'm not saying that at all, but you want to remember though that the dot-com bubble saw stocks pull back 87%. Massive pulls. That included the biggest leader of all time back in that time, at that time in history, Microsoft, massive selling. So don't discount the fact that some of these stocks can take some real bad beatings. All right, we're getting some comments in here. I think there's been a little bit of delay, but just keep sending them anyways. Let's see. Can I chart Wish? Be happy to do that here. So a lot of people have been interested in this one. You saw where the volume was coming in pretty heavy back in June, July of last year. A lot of people got sucked into it, going from 7 all the way up to 15. But what has it done ever since? Has it given you any reason to stay in it? Not really. I mean, the stock is just continuing to disappoint. You never know when a stock might bounce, but that's not reason enough to stay in it. For me, when I'm looking at Wish, I'm looking at this consistent selling. Every time it hits this declining trend line here, it just continues to sell, and it sold off today. So a lot of people, and it drives me crazy, but a lot of people think that when they are losing on a stock, they have to make their money back from that specific stock. And you don't. See, sometimes when the stocks that are losing are not the best ones to try to make your money back with. That's why stop losses are important, because if you get stopped out, it frees up that money to put to something else to actually make back that money. And there's probably a better trade setup to make money back in than the one that you're losing it in. You follow me? A lot of people think, I got to get back to break even before I sell. Well, a lot of times when they have that mentality, it's because they haven't kept their stop losses tight. They haven't planned out where they're going to get out before they ever get into the trade. And as a result, they find themselves down 20, 30%. They can't fathom the idea of just going ahead and taking those losses. And so when you get to that point, you start finding yourself doubling down, because you say, okay, if I got in at $7 and it's trading at $2 and I can go and double down here, maybe I can lower my entry price down to like $4.50. And all I have to do now is get it to go up to $4.50. Well, you still need it to go up 100%, over 100%. And so then when that doesn't happen, what are you more inclined to do again? Triple down. You got to keep adding more shares. So that's where the problem comes. And so a lot of people, they don't want to get out of a stock that they're losing in. But if you have the mentality that it's like, okay, this stock has to do what I expect it to do going out of the gate. I expect it to lose. That should be your first mentality. I know that kind of goes against what what we should be thinking as traders. We should always expect it to lose. That's why we got to have the stop loss management. But the trade set up to the upside, or the reason why I'm getting into it, doesn't play out the way that it should, then I need to get out of it. And that's where your stop loss comes in. It hits your stop loss, you get out, you move on to the next trade that looks like it has a decent reward to risk opportunity. So real quick, pulling back up this LRCX trade that I just made this week on Monday. Why did I get into LRCX? Well, I started seeing some of the bullishness in the SPY, right? Saw this SPY trying to bounce off of this rising trend line there, okay? That was the first sign that maybe this market's going to turn around a little bit, okay? Then I was looking at what were the stocks that were moving with it. Well, you had a big move out of tech there. So tech was moving. And then you want to drill down a little bit further and see where there was actually semiconductors moving as well. So then I was looking at LRCX and I noticed this big, massive support level. Pulling back to this big support level, holding it. And so I decided I wanted to get on this bounce. So on Tuesday, got in on this bounce here, rode it all the way back up from about 668 all the way up to 724, and I took some profits along the way. Now, if it didn't work out for me, I was going to be out. I think my stop loss is originally at 642.41, so that would have been below the December 6 lows. That was my clear. This is my support level. If it broke below that, I knew that there was something more wrong with the trade than I initially realized, and I wanted to be out. So no longer do I want to stay in this trade if it breaks below it, but it didn't do that. It went up. And so I went ahead and took those profits. And then when I start seeing it, I'm trading what I'm seeing because I'm saying, hey, this stock is starting to give up those gains. There's no reason to be in it. The market's selling off. Let's go ahead and get out. We're hitting some resistance. Whoops. We're hitting some resistance here. Okay. That's a good enough a reason right there to sell. I go ahead and get out. I make about 6% overall on the total trade. So back to Wish. Whether it's Wish or any other trade, when you're stuck in a stock that's losing for you, you don't want to just continuously hold on to a thing that you got to make that money back, because sometimes it's best to free that money up to go pursue other trades. Yeah, I mean, there may be. So the question here on Wish was, there's a new CEO. I didn't even know about that, but I wouldn't necessarily play. I'm more of a technical trader, so I don't pay too much attention to the news. I enjoy upgrades. I enjoy positive news catalysts that move my stock to the upside. Who doesn't? Because it helps you win on that trade. But there was a lot of people that were excited about Twitter. I mean, Twitter actually rallied when Jack stepped down, and what has it done since then? It's been selling off. So just because there's a new CEO, you don't want to say, okay, this thing has to go, and do well. Falling wedge. Let's see. I mean, you could say, yeah, maybe that's a falling wedge and all, but I mean, it's just hitting against this declining trend line here. So, if I'm looking to get long on it, which I don't think it's a good trade setup at this point, it needs to break above this 296 area. So about net, yeah, I mean, it's still struggling with that declining trend line there. What concerns me with net now is this massive trend line here, and it broke it today, down 13%. When a stock sells off 13%, it's trying to tell you something there. It's telling you there's a problem. It's like that old line from Apollo 13, Houston, we have a problem. You definitely have a problem there. It's making new lows. This bounce looks like it's failing. Couldn't get above the 200-day moving average either. I can go ahead and get rid of some of these lines just because it cleans up the chart some. But two support levels, right? Those needed to hold. They didn't hold. That one's pretty ugly. I have no desire to get into it at this point. If I was to get back into it, it would need to rally back up, and it would need to show, okay, maybe it puts in like something that looks like a double bottom right here. It starts to base, and then it eventually breaks above 123. Then you might have a trade set up there. All right. Poe says, comments, hello, love your advice. I've been listening for a long time. I was wondering, what do you think of dividend stocks like MO and VZ during this uncertain bearish quarter? I actually bought some VZ just recently here, not because I think it's a unbelievable company that's going to go skyrocketing back up to 62 or anything, but it does have like a 60% dividend, or just below a 6% dividend. So one of the things I don't like to do is have like my dividend plays, my long-term investments and swing trades all in one portfolio, because those are all going to have different objectives, right? So your dividend plays, you're really just collecting on dividends and the stock goes up over time. That's great. But these are things that I want to hold for, like, I'm 41 right now. I'd like to be able to hold them until I'm 70 something. So, if it keeps collecting that 6% and keeps, they keep growing that dividend, or the stock does go up over time, that turns into a really good opportunity there. Your dividends are only going to come out every 3 months. So one of the things, I think the last time that we had a sell-off that lasted 3 months was 2018. So there's not a lot of those, but beyond that, you had some weakness in 2014 and some times of weakness during 2015, but you haven't seen like long-term weakness like what we saw with the dot-com bubble. That was like a 3-year sell-off. You had the Great Recession that was about a year and basically about 15 months, 16 months of selling. So I think it's good. I also don't think cash is a bad position. A lot of people don't like the idea of holding cash, but cash, I know we got a lot of inflation right now, but sometimes, taking the hit on inflation is better than taking the hit on a major stock market sell-off. If you're worried about the inflation, there's like the ICE savings bond, which I think gives you about a 7.1% return for now. I think they're going to announce what the new return is going to be on it come April. Double check me on that. I don't know that for sure. It's not really one of my areas of specialty, but I do like having a dividend portfolio. VZ actually does look a little bit bullish of late. It's pulled back to this neckline of this inverse head and shoulders pattern. So keep an eye on that one. As for MO, I don't remember what the dividend is on it offhand. I know it's a traditional dividend play, but it is breaking out. It looks pretty good. It is considered a defensive play too. We were talking about how the staple sector or defensive stocks were rallying today, one of the top 3 sectors, and one of 3 stock or sectors to finish higher on the day. Tobacco is historically a very defensive sector. It's kind of like utilities, power companies, stuff like that. But yeah, it looks pretty good breaking out of this channel here. From a trading standpoint, I would say below 48.61, I would be done with the trade. I think right now, I do think it looks pretty good. But again, you want to make sure that you're not just throwing capital at things that are just going to get crushed by this market ultimately. It can have a good couple of days. So if you get into it and you start to see it to rally, it doesn't hurt to take profits along the way. That's what I do with LRCX. Proved to be a pretty good trade. Tough question here. He says, "Hey man, I was wondering what percentage cash you like to hold on to when there is a lot of uncertainty." I actually haven't been all that heavy in stocks of late. It's not that I don't want to. I actually want to. The last couple of days I've been wanting to buy stocks, but I can never get those market conditions to line up to really give it to me. So I was only in one stock this whole week, LRCX. I got into an inverse ETF here at the close, but we'll see. I don't really hold on to like a fixed number. I really try to let the market guide me on that, right? So if we're in a pretty strong bullish time and the market continues to push higher, I'll continue to increase my exposure to the long side because I'll continuously add new positions, but along the way, those positions are increasing in value. And it's also offering me the opportunity to add more of them because I'm already sitting on a lot of profits. When the market starts to get choppy, like what we've seen back in over the last 2.5 months here with SPY, well, then I'm not going to be in a lot here. And it's not because I'm choosing. It's like, okay, I need to raise cash here. It's because the market's so choppy, it's hard to sustain a move for a long period of time. Something like this, yeah, you can sustain those moves for a much longer period of time. Even with something like this, you can add 4 or 5 positions into the portfolio. But right here, it's kind of hard to have more than 2 or 3 stocks in the portfolio. Usually you're probably at 1 or 2. Looking at TPR. Key to pulling up a chart is to type it in correctly, right? So can't even look at it. I always have a problem with that on these live streams. Keep mistyping all of them. But what I'm seeing with TPR, Tapestry Inc., slight declining channel, and it's stuck in it, right? We're looking at since April of last year. If you got into it, it's essentially just been going up and down, right? There's not really been, you're looking at like the median price of around 41.89 or so. So if it gets back up to 46, you have to start wondering, okay, are we going to hit this level again and then sell right back off? for me, it's always best to wait for these breakouts of these sideways channels. I know that you might want to get into it and you're like, well, man, I got to wait all the way until 46. Well, you don't know what the chart's going to look like that time. It could consolidate really nicely below it, break out, and then it runs up to 60. But you want to wait for the trade steps to develop, not, force anything, because if you do, then you get stuck in these sideways channels that are just really annoying to get stuck into. So until it can break out of this channel, there's really not a trade setup there. Silvio Z, great advice. Stuck in CHPT, thinking of a stopping out at 1450. Yeah, CHPT looks pretty rough, guys. Massive support, that's breaking down. I don't even see really where there's a stop loss placement here that would look good. 1450. I mean, I don't know anything to say about that from a personal standpoint. If I was trading this stock, for me personally, if I was trading this stock, I would have already been gotten out of it once it broke this major support level at 1729. Yeah, I don't see any real support. Maybe, I mean, you can go back to like October of 2020 and say, well, there's some support at 1264. That's a long ways down. Maybe move the chart a little bit so you can see what I'm talking about right there. And that's not even really that strong of support. This is what you call support, and that got broken. SEDG. So SEDG, and I saw that solars for a while there were rallying pretty good. Where did they finish the day at? Looking for there we go. Boy, man, that was a hard reversal in that solar industry there. Look at that. Really good on the day to start off, and then it just gave it right back up, looking like a bear flag there. That's why it's important to look at these industries and sectors to see where they're performing, because you can get a good trade setup, but it's in a bad sector or a bad industry, and it just really takes you to the woodshed. But SEDG is a perfect example of that. You got a little bit of a bear flag pattern there. Okay. Doesn't look like it. Has it confirmed it? No, I wouldn't say it's confirmed it, but it's right on the cusp of confirming it. The other thing that you see with SEDG is a series of lower lows, lower highs, another lower low, lower high, new lower low. Now it looks like another lower high here. You also have some resistance right here. That's going to be a little bit of an issue. So from a technical standpoint, I'm not in love with this chart. You think selling puts on stocks you want to hold long term is a good idea in this environment? Essentially, selling the puts, if it gets down to that price, you have to take ownership of the stock. It can be. I mean, I know a lot of people that do it. For me personally, I'm not a huge fan of that, because you're still taking it at a loss right out of the gate, and those can be some pretty hefty losses as well. And then if the stock keeps going down after you take ownership of those stocks, then it gets really messy. All right, T's another stock that has a pretty good dividend to it. Has rallied back pretty well of late. You can see I've been marking up this stock for quite some time. Gosh, I gotta like pull up a monthly chart to show this one what I want to show you on it at least. Massive support level. It broke it. This was like a very scary thing here when it broke the support level, because this is something, again, you pull up the monthly chart, it is not broken it since like the 90s. And it broke it, man. I mean, it didn't even mess around. I mean, this was just a straight shot lower, but it's done a great job rebounding. The sellers were exhausted, but now you got some, let's see, let me get this thing drawn right here. Looks like you could have some resistance coming up. Not for sure how strong that resistance is going to be, but it's at around 30.20. Hasn't tested it since, May of last year. So there's that. I think there's a little bit of a chase going on at this point if you were to get long on it. I mean, you could say there's a little bit of a secondary breakout as well. That, okay, if it gets out of this consolidation, looks kind of nice. It maybe like a little ascending triangle pattern. Breaks above that, you can make that move up to 30. But this is a slow rolling stock. So I would look at this more as a dividend play. All right. And definitely looked at CHPT already. Thank you for that, Lou. Thoughts on Baba? A lot of people want to know about Baba, right? Because this is, I think, one point it was like the 6th largest company in the world, and we're talking about falls from grace, man. Look at that one, going from 300 plus all the way down into the 130s, just a 50% haircut. Let's get rid of some of these lines here too that aren't necessary. But I've been watching this little base breakout here. You got a nice double bottom here that's formed, a little dilapidated, but you do have a double bottom. Broke out of it, and maybe it pulls back here. It could be an interesting play. It pulls back to like 127. If it can hold it, and you can see that it's trying to hold it, like that means even if it breaks down below intraday, it comes back up and it maybe forms like a hammer candle or a doji candle. You can get a move maybe back up to 146. You can, using maybe a stop loss of 115-ish. So not the best reward to risk ratio. But if it breaks through this declining trend line, man, this stock could go on fire. Let's see here. What does Barry Sycamore have? What do you think of ORGN? Looks like some support breaking down right there, if you ask me. You know what's interesting too? I noticed this about the material rally that we've seen. It's kind of been hit or miss this week, but when it rallied, these chemical plays were not rallying with it. I mean, they were really sluggish for the most part. I mean, look at Sherwin-Williams, right? That's in the material sector, but then look at materials. Not nearly the breakdown of materials that you're seeing across the chemicals, which goes back to my point. Like, if you have a good sector that's rallying and you want to get into the materials, make sure that the stock that you're buying and whatever industry that it's in, that it's in a good industry. Because sometimes you can have, especially you see it in tech all the time, where semiconductors will be rallying, software will be selling off, and vice versa. But yet tech will still be up somehow. But back to ORGN, though, support level here, a bit of a channel here that it's breaking down and below. The only reason that I'm not quite sure it's definitely broken down is because, well, I would normally draw it like that to get as many price points to hit this line as possible, and it runs parallel with this line above. You could even say that, okay, well, maybe it's not. Maybe that's the support level, but those support levels are not nearly as strong as the one that I'm showing right here, and it's breaking below it at the moment. So I'd be very concerned. For me as a trader, I see these kinds of moves. It makes me concerned. Justin Clark writes, "Miss you, Ryan. Justin, come back to the trading block, man. We'll reunite." BYND. Quick story. My son, he's like 13 now. He'll be 14 in a month or so. But go to not Robin Hood, Red Robin, that burger place. He orders this thing called an Impossible Burger, and the waitress says, "You okay with him getting an Impossible Burger?" I'm thinking like it's an impossible burger to eat, like it's just super big. I'm like, man, hey, more power too if you want to eat the dumb thing. But find out he ordered a veggie burger, and nothing against veggie people, or people who like the veg, but I like my red meat, and my son doing that was just like a stab in the heart. He brought him out the veggie burger, man. I was like, yeah, Red Robin, man, you're gonna do that to me? But in any case, I love hamburgers. I made good smash burgers too. Basing pattern here. 50-day moving average looks like it's a bit of a struggle for it of late. The last time I tested it, it saw a rejection of price. You saw it here again, here and there, and a lot of different places. But yeah, nice little basing pattern. The big problem here with BYND, while I like this basing pattern that's formed, if it breaks out of it, what's it going to do when it gets back up to $80? Now, it'll be a nice little run, but remember, the longer it takes to get to that $80 or to this declining trend line, the lower the price is going to be. It's a steep price. I mean, back in February of last year, it was at 200. Now, that level is at 81. So if it takes a couple of weeks to get there, this thing is going to be a lot lower. So you want to watch this declining trend line there and its effects on the overall price action. But yeah, I mean, it could work. I mean, it bucked the trend today up 4.75. This is one of the stocks that have been one of the stocks that just got destroyed by 2021. Kind of like Peloton. But even like Peloton, it didn't rally today. It was down another 7%. I'm waiting to see Peloton bikes on the side of the road. Might pick one then. All right, Justin is coming at me with Bud. Actually, Bud was the name of the dude on the podcast, my most recent podcast. Anheuser-Busch. Again, notice the sector that it's in. Staples, right? Staples tends to be one of your more conservative sectors to be in when the market's selling off. If you're going to, stay long on the market, or if you're going to fight through this stuff, you're better off going towards more of the safer sectors. Why is that? Because in a sell-off, people are still, if we go into a sell-off or a recession or a depression or whatever, again, not saying that's exactly what we're headed towards right now, but the charts aren't healthy right now either. But people are going to still keep buying their alcohol. I know I am. But it's above the 200-day moving average. Nice move. 3% higher. That's a big move for Bud too. Almost feels like a little bit of a chase at this point. Here would probably be my tactic, my strategy. If we get a market sell-off, let's see whether or not Bud comes down with the rest of the market. If it does, maybe try playing, at least this would be my take on it. Maybe try playing like the 64, 65 level. Maybe if it pulls back to 64, it might offer like a nice bounce off of this breakout level. Would be really nice if it did it around, maybe like a month from now and it's doing it around 64.53. That would be really nice. ZM bottoming soon. And you got to actually see a bottom, right now this is like falling knife mode. And so you can't really, you don't want to catch the falling knife because most of the time you're going to grab the blade and not the handle. And right now, I mean, I'm just looking for support here. Maybe that's support, but I wouldn't call that necessarily good support. And it's so far back. I mean, you're talking about the last time the support was tested was May of 2020. So I don't really want to put too much faith in that one. And it looks like, too, it's below it. It's below that one as well. So forget that. Where I would need to see it starting to bottom is, one, we're getting a little basing pattern here. We've which one was it that we're talking about? BYND. See, that's a little bit of a basing pattern. That's an attempt. I wouldn't even say that's the bottom necessarily, but it's an attempt at a bottom. Okay, you got the declining trend line BYND. It needs to break above that too. But with ZM, you don't have that. You had an attempt at a bottom here, and it was like a little double bottom back in mid-December. But the whole thing with it is it needs to get above this declining trend line, and it's not. I mean, that's like at 200. It's currently trading at 166, 162. So there's no reason to be bullish on it or to think that there's a bottom in it just yet. That's where I go back to trade what you see, not what you think. Do I think it's in a bottom? I mean, I could have said, hey, why are we not bottoming here at 231 and now we're at 162? And that's just more me like thinking that. But you have to see it. You have to see it. And I tell people, don't just think that you can outsmart the market. Let the market show you what it's trying to tell you. Let it tell you the story rather than you trying to impose what the story should be. CLX. Clorox, man, that was the big one during the COVID. Man, this thing just ramped like crazy during COVID. Holy cow. I like to go back because this is a stock that tends to be more slow moving. It's more like your Verizon, AT&T stocks, but nice little base here. It's on the upward rise there. I hate those kinds of breakouts, not because it can't work, but because the support's rising underneath it, but or the resistance. I'm sorry, the resistance that's breaking through is rising, but it is a nice one. I mean, you even got like an inverse head and shoulder there with the left shoulder. You got the head, then you got the right shoulder here breaking out. This is the neckline, so it looks pretty good. Stop loss lies. I mean, you could go way down there around like 169, or you could go much more conservative and maybe put it below 177. I'd probably be doing more 177 than anything. Good divvies too. I don't know what the divvies are offhand, but do I have it listed on here? Or I'd be. No, I just have the dividend date, right? Yeah. Oh well. Could have given it to you all real time there. IP. I like this one. I think I've traded this one a few times in the past, and it's It can be annoying, man. This IP, but I mean, sometimes it makes some phenomenal runs. It really, I mean, it'll really surprise you. But again, you got like a left shoulder, head, right shoulder. I'm added it to my watch list. Sorry, actually, I already did. But as we were talking here, but you got a declining trend line here, maybe at 52. So watch that. This is going to be a little bit slower mover trade. This isn't cyclical. So you want to be cognizant of the fact that there is some selling pressures in discretionary stocks right now. IP kind of does move to its own, marches to its own drummer. But yeah, I like the chart. I think the reward risk setup is pretty solid too. I mean, I think you can put it around like 47, just below 48. VIAC. So VIAC can. Here's the big issue with VIAC is that there's just a lot of resistance. This was once huge support, broke that support, had a decline trend line, actually broke that though. So that's a positive development right there. So if you were to get into it, this would have been the place to get into it, like around 30-50. And I'm not trying to like go hindsight, 50-50. It's I didn't play it or anything like that. Maybe you could even, probably the more conservative approach would probably have been like 30-93. So it's rallied about 20% from there. You just got to be careful with this price level at about 38.40, 38.50. So if it can break above that, then yeah, there may be like signs of life for it at that point. But until then, that's a lot of pressure right there because that's resistance going back to April of 2021. You just mentioned that you should trade what you see. Do you ever hear rumors about a company or videos that make you trade a risk on a potential future of a company? Or is that just gambling? I guess what I'm trying to guess is that, okay, it's a company that has, like, you take like RIVN, for instance, right? I mean, a lot of people bought into it for its potential. I think I'm reading that right. Yeah, I don't think there's, I mean, that would be more of like a long-term trade, I mean, versus a swing trade based off the technical analysis. But those companies, though, in a market that starts to sell off or is in the midst of a big sell-off, they're going to get hit the hardest. And one of the things I did, and I even did a video on my YouTube channel, was say, hey, RIVN or any IPO, you're better off waiting like 4 to 6 months on it. I mean, look, the charts are almost all the same. Look at this. They do the same thing. They spike up that first week. Everybody thinks they're going to get rich on it, and then they just get unloaded on. PLTR is another one. I mean, spiked, gone lower. Snow actually hasn't done too bad. It's recovered quite a bit, but a lot of stocks. I mean, it's really not that far away from where it IPO'd at 250. What is that, about 250, 246 or so that it opened up at? It's trading at 291 still. But when I talk about the 4 to 6 one, even with snow, look how far down it went though, went down into 180s before it finally bottomed. So, but when you have a big market sell-off, yeah, those companies that have like no earnings, they're usually going to get hit the hardest. In any case, guys, make sure to check out down below. Hit the join button. You'll get all my market research every day. That's going to include updates on SPY, Qs, the Nasdaq. You're going to get updates each week on all the FANG stocks. Plus, you're going to get my master watch list each week. Plus, my list of stocks that I'm watching each and every day and the most intriguing charts of the day as well. So click that join below. You support the channel and stay safe out there, guys. I mean, this is a market that you can lose a lot of capital in. You don't want to be one of those people that just gets their head handed to them. So don't feel the need to have to trade each and every day. Let the market tell you what it wants to tell you. Follow the story that it's trying to display for you, put in front of you, and follow that. Follow the trends. Follow the sectors that are leading. Follow the industries that are leading within the sectors, and I think you'll be fine. Make sure to click subscribe so you can be part of this channel, and pound that like button, guys. All right, thank you. God bless.